Okay, well, hello everybody. My name's Stephanie. As Ella said, I work at Blick Rothenberg. I'm a chartered tax advisor, and I am here to try and explain as simply as possibly the tax system for self-employed people. There are some really complicated rules around being self-employed and filing tax returns, but I'm going to try and keep things as simple as I can and cover the more common points and scenarios that come up. I'll try to avoid using any jargon, but again, the tax system doesn't really help me out with that. So I'll do my best. If I do use a word that doesn't make any sense or needs explaining, just please feel free to put it in the chat, and I'll go back and see if I can make things clearer. We'll also run through a copy of a tax return just to point out the main boxes that you should expect to put some numbers in, because I feel like that could be quite helpful. Please ask any questions as we go along, as they occur to you, either by putting the hands up emoji on Teams or put them in the chat, and I think Ella's going to monitor those questions, and you can pull me up, Ella, and let me know when we've got a question, and we'll answer them as we go. Okay, so this is what we're going to cover. What is self-assessment? Am I self-employed? Because that's the first key question to ask yourself. The different reference numbers that you would end up with if you are self-employed and you're filing a tax return, registering for a tax return, the key points of being self-employed and the figures that you need to try and keep a track of. What tax do you pay? How can you reduce your tax bill? And then payments on accounts, which is, it unfortunately affects a lot of self-employed people, and I found one of the most complicated things to get my head around when I was first training in tax. So we'll try and cover those simply as we can. And then paying your tax bill, and then any other questions at the end that we haven't dealt with as we go along. Okay, so self-assessment. When we're thinking about a UK tax year, we're always thinking about the 6th of April to the 5th of April. So right now, at this moment, we are in the 2023-2024 tax year. So that runs from the 6th of April 23 to the 5th of April 24. The deadline to file your tax return and to pay any tax is the 31st of January following the end of the tax year. So the tax year 22-23 ended on the 5th of April 2023, and those tax returns are the ones we're completing now and should be filed by the end of January 2024. So if you are self-employed, you don't just include your self-employment income, you should put all income that you receive on the tax return. So that would be your self-employment income and expenses. If you also have a job, you should put your employment income on there as well. If you make student loan repayments, so if you're just employed, student loan repayments are made through your payslip. But if you're only self-employed, you need to try and include details of your student loan on your tax return, and then your student loan repayment gets added to the tax return. If you receive any bank interest, but not if that's in an ISA, because anything that's in an ISA is tax-free. But if it's bank interest on a savings account, or a current account, if you're that lucky, that should also go on your tax return. Dividends, property income, including if you have someone living in your home and paying you rent, you might need to put that on your tax return. And if you sell something, there's lots of rules around what you might sell, so I won't go into that, but if you do sell something, you might need to think about whether you need to include it on your tax return. So am I self-employed? This is one of the areas where there's a lot of complicated background tests to jump through, but in very simple terms, if you're trying to make money, the revenue, consider that you're self-employed. So some people will have hobbies where they have a little activity that they do in their spare time, and they might sell something, but they're not really trying to make a profit. It's just a bit of a sideline for them, and in that situation, you wouldn't be considered self-employed, and the revenue wouldn't expect you to file a tax return. But if you're putting in the hours, you're spending money and incurring expenses, trying to make some money to support yourself, then you will be considered self-employed. And just to add to the confusion, The revenue may also refer to you as a sole trader. So this is down here, further down, halfway down the slide. But sole trader is the same as self-employed. So you decide, you realise, you confirm, yes, okay, I am self-employed. Do I need to tell the revenue? You need to tell the revenue and file a tax return if you earn more than £1,000 in a tax year from your self-employment. You should also tell them if you make a loss. So if you spend more than you take in, because you can claim that loss against your other income. Or if you're in the early years of being self-employed, it might take you a few years to make a profit. But if you've got those losses recorded with the revenue, you can offset them. So if you make a loss in the first year and a loss in the second year, but in the third year you make a profit, those losses can reduce the profit that you make. You might also need to file a tax return to prove that you're self-employed, because for certain benefits you would need to prove to the revenue that you've been working. So if you start to be self-employed and you don't currently file a tax return, you need to tell the revenue by the 5th of October following the end of the tax year. So if you started self-employment in January of this year, this would be the 22-23 tax year, so you should have told the revenue by the 5th of October 2023. They then register you for self-assessment, and you have until the 31st of January to file that tax return. And the way you do that is so if we click on this link, so this is the first link. Why do you need to send a self-assessment tax return? So if you're just self-employed, you would say, this is the reason I'm self-employed. Tick that box. Did you send a tax return last year? So if it's the first time that you're ever filing a tax return, you'd say, no, I'm registering for the first time. And then the revenue says, okay, you need to register for self-assessment and for Class 2 national insurance. To do it online, the revenue like you to set up a government gateway. And a government gateway is actually a quite helpful thing to have, because you can see a lot of information about yourself on that gateway.
Oh, Stefanie, we've got a question.
Oh yeah, please go ahead.
They're asking, is there a company that can help with tax returns? I'm not self-employed, just thinking for the future.
Yep, so if you wanted somebody to help you with your tax return, you can go to a firm of accountants and they will file your tax return for you. And there's hundreds, thousands of accountancy firms in the country, so you can just really Google and see which ones are near you and see who can deal with self-assessment tax returns, and you just go to them, and then you what you would have to do is gather all the information that we're going to go through, and they will do the tax return for you. So that's the really easy way to do it, but you have to pay them, because you have to pay them to do that for you. So registering, is that okay? Does that answer that question? Yeah. Okay, I'll carry on. So registering for a personal tax account. So this is the revenue website isn't the easiest one in the world to navigate, but sometimes it is really helpful. And the personal tax account is one of those helpful things, and it lists here all the things that you can do through your personal tax account. So to start off by setting yourself up with a tax account, you'd need to register for the government gateway, and this is a list of, you'd need two of the things here. So you'd need some form of ID and maybe a pay slip, or something to do with a credit card, but maybe it's easier to have a passport and a driving license. And then you just would click start, create new sign-in details. Right. Oh no, my mistake. and then you would put your email address in here and continue and go through all the boxes, and eventually you would get yourself a government gateway ID. So by the end of that, you will end up with several different reference numbers. One is your national insurance number, which we call a NINO, and that's issued automatically when you're 16 if you're a UK citizen, and that's in the format, there's 2 letters and then 2 numbers, 2 numbers, 2 numbers, and then 1 letter. So that little, I'm older. I got given a card when I was about 15 or 16 with my national insurance number on it. I don't actually know if they still give cards out or whether you just get a letter through the post. But if you have had a part-time job or anything like that as a teenager, they ask for your national insurance number. If you have to register to submit a tax return, you will have a unique taxpayer reference number, but only people who submit tax returns have a UTR. So when you've gone through that process of registering with the revenue and telling them that you need to file a return, they will send you a UTR, and that's a 10-digit number. That's unique to you. It goes on the front of your tax return, and it will be on any post that the revenue sends you relating to your tax return. You'll also get given your government gateway user ID, which is a 12-digit number, which is a bit dangerously close to the UTR, so it's easy to get confused and try and log in with your UTR rather than your gateway user ID. So they're the numbers that you'd end up with once you've gone through the process. So it's important to try and keep records of your self-employment income and expenses. And we're always thinking about a tax year. We're always thinking about the 6th of April to the 5th of April. Income, what it sounds like, it's what you've been paid, what you've invoiced for. So that's probably the easier one to keep a note of. Your expenses are anything you have spent money on to help you do your job. And some common examples are internet costs. If you work from home, you may use the internet to help you do your job, so you can claim some of your internet costs. Your phone bill. If you buy something that you then sell on, that's a cost. If you have advertising costs, postage, stationery, refresher training courses, travel costs, use of home, pretty much anything that you think, actually, I would not be able to do my job if I didn't spend money on this thing. And if you had a tax advisor, so somebody doing your tax return for you, you'd just send them all this information and they'd sort it out for you. I always say to clients, it's always better to send me more and I'll tell you what we can claim and what we can't claim. And I'd say the easiest way to try and keep these records is to just on a monthly basis, as you go, just try and keep a note. What have I spent this month? What have I spent to help me perform my self-employment? So further points on expenses, because it's not that straightforward, unfortunately. It has to be incurred 100% for you to do your self-employment. So if the cost doesn't relate in full, you need to restrict it. So for example, if your monthly internet bill is £100, but you use it 50% of the time for work and 50% for personal use, you can claim £50 a month, being 50% of the total internet bill. So the costs of working from home, if you have a home office, there's a really complicated way of working out how much you can claim, which is based on the number of rooms you have in your house. Or you can use this what the revenue calls simplified expenses. So you just work out how many hours a month you use your home to carry out your self-employment, and then deduct this amount over here. So if you say, in January I worked 25 hours on my self-employment from home, you would claim £10 for January. If in February you had a really busy month and you worked for 60 hours a month in your home, you could claim £18 a month for February, and so on. If you use your car or any other vehicle to do your self-employment, you can claim your mileage based on, so you can claim 45p a mile for the first 10,000 miles. So if you drive around to clients and you do 10 miles in a week, you can claim £4.50. And then you just have to keep a record of your business mileage through the year so that you know what amount you can deduct. Even simpler than all of this, if you can't keep a record of your actual expenses, or you haven't kept a record, or you think actually my expenses aren't that much, you can claim the trading allowance. And that's a box that you tick on the tax return, and that just deducts £1,000 from your income. So if you say, I know my income, but I haven't got a clue about my expenses, you just claim the trading allowance, and then you get £1,000 off instead of your actual expenses. And I'll show you that when we go through the tax return. I'll show you where that is on the tax return boxes. Okay, so what tax do you pay? Everybody gets a personal allowance, which is currently 12,570, and you don't pay any tax on that first 12,000 odd. So what you've done is you've got your self-employment income, you've deducted your expenses, and that gives you your profit, and your profit is what you potentially pay tax on. So if your profit was £10,000, that would be below your personal allowance, assuming you haven't got any other income. So that means you wouldn't pay any tax. But because it's over 1,000, you'd still have to put it on a tax return, even though you don't actually have any tax to pay. If your profit is over 12,500 up to 50,000, you'd pay tax at 20% on that profit. And so on. If you're over 50,271 up to 125, you pay tax at 40% on that slice. So you'd pay 20% on the amount that falls within this bit here. And then once you're over 50, the amount over 50, so if your profit was 60,000, it's only the extra 10,000 over this 50,000 amount that you pay 40% tax on. You also have to pay national insurance, and there's two types of national insurance for self-employed people. The first is class 2, which is currently £3.45 a week if your profits are over this 6,725 amount. Class 2 is being phased out from next April, so it's only relevant for the 22-23 tax returns and for next year's tax return, so for 23-24. You also pay class 4 NIC. And again, this is based on bands. So if your profit falls between 12.5 to 50, you pay 9%, and that's going down to 8% from next April. And if your profits are over 50,000, you pay class 4 at 2%. And I put here, as I mentioned before, even if your profits are below the personal allowance, you still need to register and fill in a tax return if your profit is higher than, if you have income of higher than £1,000 from your self-employment income. Tax reliefs. So these are things that you may want to include on your tax return which can reduce your tax bill. Pension contributions. Again, the pension contribution rules are extremely complicated, so I will keep it very simple. In theory, you can contribute as much as you like to a personal pension in a tax year, but you only get tax relief up to 100% of your self-employment profits. So if your self-employment profit was 10,000, you'd be limited on how much you could put in your pension. You'd actually be limited to 8,000 because the pension contribution gets increased when it goes into your pension. If your self-employment profits are less than 3,600, the maximum contribution you can make is this 2,880. So I would say if you've got a pension and you're keen to make pension contributions before we get to the 5th of April, so maybe sometime in March, you look at your estimated earnings and profit for the tax year that's just coming to an end and see how much you might be able to pay into your pension. Gift aid donations. So if you pay tax you should tick the gift aid box. Whenever you make a gift aid donation, they say, would you like to gift aid this? And if you pay tax, you should say yes, because the charity gets extra money and you may get tax relief. If I go back to this slide, if your profits are in this band, if they fall into this 50,000 and over band, you would get extra tax relief if you claimed those gift aid donations and the pension contributions and put them on your tax return. Again, the actual mechanics of that are a little bit difficult to explain, so I won't go into it unless anybody would like me to. Now, payments on account. So if your tax liability for the year is over £1,000, the revenue want you to pay your tax for the following year in advance. So they say, okay, you're paying your tax bill for this tax year, but because of how high it is, I want you to make 2 advance payments for next tax year. So this can be a bit of a shock for people in the first year that they're self-employed, because if we take 22-23, you would have your tax bill for your 22-23 profits. So say that was 2,000, you'd have to pay that in January coming. But then the revenue would also say, okay, well, for the next tax year, for 23-24, we want you to pay half again in January and then half in July. So you'd end up having to pay 3,000 in January and another 1,000 in July. You feel the benefit of that when you're doing the next year's tax return, because instead of having this big balancing payment to make, you've already sort of paid some money towards your tax bill. So if we went to 23-24 and your tax bill was 3,000, you don't have to pay that 3 because you've already paid 2 up here. So those two payments get deducted. So the amount you owe for 23-24 is 1,000, which is the 3,000 less the payments that you paid in advance. And then you'd also have to make your payment on account for the following year. So it's a painful system to be in for the first year, but it does help your cash flow going forward, because instead of having one huge tax bill every January, you've made some payments towards your tax bill. And if you overpay, so if this tax bill here was only 1,000 and the person had paid 2, he would get a refund of 1,000. And you can also make a claim to reduce the advance payments, because the revenue just assumes that your tax bill is going to be the same every year. So if you're doing your tax return and your payments on account were up here with the 2,000 and the payments on account assuming it's the same, but you say, oh, actually I was only self-employed for 6 months and then I stopped, so my tax bill won't be as high, you can, on your tax return, you can claim to reduce these advance payments. So you might reduce them to £500 each instead of 1,000. But the revenue will charge you interest if you get it wrong. So it's important to try and guess as accurately as you can. Now, there's many different ways you can pay your tax bill, and this is another area where the revenue website's quite helpful. And it says this is why it says here the deadlines for paying your bill are either the 31st of January or the 31st of July, because July is that second advance payment that you have to make sometimes. So you can pay, I won't click, well, I don't know where this will take me. Let's click it anyway. So here, so if you pay there, it will say, do you want to sign into your tax account? So you can do it that way with your UTR. Or you can do online banking, you can do telephone banking, you can use a debit card, you can go to your building society, you can just about still pay with a cheque, but the revenue don't tend to like it anymore, but you can do it. Yes, unsurprisingly, they make it very easy for you to pay your tax. Questions? Okay, so unless there's any questions now, I was going to run through the tax return.
Anyone? Any questions? No? Okay, I think we might be all good.
Okay, great. Okay, so I practiced this earlier, so it should work. Okay, so the whole tax return form is very long. There's lots of words on it. There's lots of boxes on it. And unless you know what you're doing, it can be quite difficult to work your way through. So up here is where your UTR would be. And when you're doing your tax return online, the revenue would automatically gets populated. And then you'd have that national insurance number here, and that's just telling the revenue who you are. In here would be your revenue address, which again, the revenue system populates for you. And over here, issue address would be your address. So you'd expect to see your name and address here. Down here, date of birth, which again, I think that comes through automatically. Your phone number, if you want to put your phone number on there. I don't think you have to put a phone number there. And then your national insurance number, which would have pulled through from up here. And then on this page, this shows everything that could possibly be on a tax return. So you could have employment income, you could have property income down here, you could have sold something, which means you have to pay capital gains tax here. But if you're just self-employed, you would just have a tick in this box here. And then you just put either one or two, depending on how many self-employments you have. So the first pages of the tax return have all the other different types of income. So if you had some bank interest, you would put it in this box here. But if you don't have any other income, if all you have is your self-employment income, you can just ignore the first page. So tax relief, this is the paying into pension schemes point that we spoke about. So if you had made a pension contribution, you would put that in this box here. And same with gift aid donations. If you'd made any gift aid donations, they would go in this box here. If you have a student loan that you're paying back, you would tick that box. These talk about if your employer has deducted student loan repayments, so you wouldn't complete these boxes if you're just self-employed. It's the high income child benefit charge. So if you have a child and you earn over 50,000 and you're claiming child benefit, this is when this box would be relevant. I'm happy to go into it, but if it's not relevant to anyone, it's not the most straightforward thing in the world. So I won't go any further unless anybody would like me to. Marriage allowance is if you're married and you want to split your personal allowance between the two of you. Again, it's quite rare, so I won't go into it. So if you're self-employed, these boxes wouldn't be relevant. And here is just if you've overpaid tax, where do you want the money paid to? So you just put details of your bank account in here. And then if you have if you've got a tax advisor doing this for you, this is where their information would be. And then this is the signing page. So your signature would be in here. So where does your self-employment go? Self-employment goes on the self-employment pages. So because you would have ticked that box saying on the revenue system, saying self-employed, it would generate these self-employment pages for you. That's my line. So your name would go in this box, your UTR is in this box, and they would be populated by the revenue system. A description of your business. So if you are a copywriter or an actress, that's what would go in there. And the postcode of your business address. If you're working from home, that will just be your home address. The date that you started. So if you started during the year, so if 22-23 was the first year you started your self-employment, you'd put a start date in here. And if in your final year, when you stop, you'd put the date that you stop being self-employed here. And the date your books or accounts are made up to. Now, again, this is a little bit of a trickier area, but I'm going to work on the basis we would be looking at quite simple accounts. So you would just have the 5th of April 2023 in there, because the most simplest way to do it is to have to make your self-employment accounts up to the same date as the end of the tax year. So business income, and again, I'll assume we're talking about turnover below 85,000, but if there's anyone who disagrees with that, then happy to go through how that's relevant. So your income, so the income you got from your self-employment would go in this box. And here we have the trading allowance. So if you were saying, actually, I can't be bothered with all details of my expenses, I just want to claim the trading allowance of 1,000 would show up in this box. And then if you're claiming the trading allowance, all these boxes would be empty. And then the system would automatically say, okay, here's your net profit. If you're not claiming the trading allowance, you might want to, you'd put your expenses in here. And there is a box on the tax return to say, do you want to just, on the revenue system, to say, do you want to just enter your expenses as one number rather than split them all out like this? And so you would just have a little number in here that's your total expenses. And again, turnover less your expenses would give you your net profit here, which the system would do for you. This is about capital allowances. Again, it's a bit more of a complicated area, so I'm not going to go into it in detail. And again, these are not for simple self-employment accounts. These boxes wouldn't be relevant. And that would be your self-employment pages done. So in theory, you could end up with, because the system would do all this bit for you, you would just have one number that's your income, one number that's either the trading allowance or your allowable expenses, and then that gives you your net profit or loss. The next pages that you'd have is your tax calculation. So this, again, the system does this for you based on your self-employment profits and anything else that you've put on the tax return. So any bank interest or anything like that, they would say, okay, this is your tax bill here. And then the difference here is if you've paid payments on account before. So if you had made payments on account, they would deduct them from this number and say, this is the amount you actually have to pay. If you've got a student loan that you need to repay, this would be in this box. And then over here, they would put in what your class 4 amount due is, and here would be your class 2. On the basis we would be just self-employed, I don't think this should be relevant. And here we have payments on account. So if you're in the payments on account regime, here we have your first payment on account for 23-24. So that would be half of this number you'd see in this box. And then if you wanted to reduce your payments on account, you tick that box. And then if you say, oh no, actually, I'm not going to be self-employed next year, I want to reduce my payments on account, whatever sensible number you think they should be reduced to, that's what would be shown in this box. And adjustments shouldn't be relevant. Blind persons and married couples, surplus allowance, very niche, wouldn't expect them to be relevant. And in the other information box, this is where you'd say, I'm claiming to reduce my payments on account because my income has gone down. So those would be the pages that I would expect to have to be completed on a tax return for a self-employed person. You do it all through the Revenues online system. And then at the end, your online personal tax account shows you what your tax payment is. So hopefully, even though there's clearly lots of writing and lots of boxes on the tax returns, the boxes that are actually relevant there's only a few of them. Does anybody have any questions? I'm very happy to go through anything again.
Oh, I'm muted. I muted myself.
Oh. I thought you were stunned into silence, Ella.
No. Well, I mean, you were very good. We do have someone typing a question, though, so
Okay.
let's just let them finish typing and then see what they've got. Right, so first question is, I was wondering what evidence we need to present for our expenses.
So that's a really good question, because if the revenue want to check your expenses, you need to be able to prove to them that you've claimed the right expenses. But that's only if you're just claiming the trading allowance. You don't need to keep any records, because that's fine. The revenue don't query the trading allowance. But things like, so your bank statements would probably show things like your internet bill and your mobile phone bill. So keep copies of those. If you had a spreadsheet that just kind of listed all your business mileage, that would probably be enough for the revenue, just so they can see that you've tried to keep a record. If you pay out for anything, just keep the invoices. And really, you should keep, if you're self-employed, you should try and keep records for 6 years, because in theory, that's how long the revenue can go back and ask to see your records. But I would say generally, if you have kept a spreadsheet and you say, I can give you the backup to show what's on this spreadsheet, but they will see that you've tried to keep sensible accounts, that should be enough for them. And I think these simplified deductions, I don't think they tend to query those, because that's the whole point of using the simplified method. Yeah. But generally, if you've got a receipt for something, just keep a receipt, or keep a note of the receipt.
Yeah, they say thank you, and you were very thorough. We've got one more question. If you get some kind of business grant, do you have to put that on the tax return?
So that depends on if it's a taxable grant or not. Some of them are taxable, some of them aren't. And I would say any paperwork you get around the grant should tell you if it's taxable or not. Or I think there might be a list on the revenue website. I wonder if I can find it. But that's the answer, really. It depends if it's taxable or not.
I do have a question myself. So
Yeah.
Right, so my question.
Yeah.
Oh, don't tell me I've forgotten it. That's going to be awkward. It'll come to me.
No problem.
Oh dear.
Yeah, so like the coronavirus grants that people got, the SEIS grants, those were taxable. But I've got a friend I know who received a grant, like an arts grant, and that wasn't taxable. So it really does just depend exactly what the nature of the grant is that you've been given.
Oh, right, actually, yes, it's come back to me now.
Mm-hmm.
What I was going to ask is, now I have ADHD,
Mm-hmm.
and it is kind of common with people with autism. And one of the features of ADHD is chronic procrastination on any task that could be stressful or difficult to start. Do you have any advice that could help people who are going to find it difficult to start on their taxes, who don't want to leave it till the last moment, but know that they have that tendency to procrastinate?
I mean, I would say that if you've kept a little record through the year, so if you've done a monthly record saying this is my income and these are my expenses, hopefully that just breaks the job down a little bit for you, because you've kind of done all the work. All you've got to do when you do your tax return is put those numbers in the tax return. And actually, if you tick the trading allowance, it's just 2 boxes. You've just got to put your income in and your trading allowance. Yeah, I know it's a daunting, not to mention quite dull job to filling your tax return. But sometimes it really isn't as big of a job as it feels like it's going to be. And like, I do think if you can kind of do some of the work yourself through the tax year and keep those ongoing records, hopefully it just makes it a little bit less daunting. I just say please just do your tax return, because if you think doing the form is daunting, wait till you get your reminders from the revenue, because they will just keep reminding you until you do it. So it can make your life a little bit easier if you can just get it done. And yeah, if you're really struggling, think of using a tax advisor. That tax advisor will, you have to pay them, but they'll chase you and they'll deal with the tax return for you. And if you can work with somebody that you feel comfortable with and you trust, that hopefully would make it easier, because you're dealing with them rather than the revenue directly.
Right, yeah. Anyone else with any more questions? Okay, I think we might be all good there, Stefanie. So thank you very much for doing this webinar with us. Everyone, I'm sure everyone really appreciates it. I certainly have, and I've certainly learned some things myself. So thank you very much for your time.
No problem, my pleasure.
Okay, everyone. So
I guess Ella, if there are any questions afterwards, you can always forward them on to me, and I'm
yes, I can
happy
always
to
if you
answer
have
them.
right. So if anyone thinks of any questions after, my email is ella@autisticnottingham.org. Just email me or message me on the Discord, and I'll just pass it on to Stefanie if you suddenly think of something afterwards, because I know what that's like. So, okay, thank you very much. Oh, we've got someone typing.
Yeah.
One more question. There we go. It's fine. Don't worry. We're happy to, Stefanie's happy to answer the questions, even if it's like, last moment. That's what she's here for.
I think the person who asked about the grants mentioned it was an arts grant that they were thinking of. So yeah, I think as far as I'm aware, I think some are tax free, but I'd just double check exactly which one it is that you've received, and even just giving it a Google can help.
Oh, here we go. Would bank interest earned in a bank account abroad, I am an immigrant with settled status in the UK, be taxed as income or savings/capital gains?
Yes, it would be taxed, because you're in the UK, you're UK resident, you live here. The revenue think you should pay tax on your worldwide income and gains. So interest paid on a foreign bank account would go on the income pages. And I think if it's below a certain amount, I know it's just foreign. So untaxed foreign interest. So that would go in this box here. But yes, the revenue say, well, you live here, we're going to tax you on everything. What was the?
Right, I'm just going to read that out. So UK bank interest, is it its own category, but foreign bank interest is income, correct?
So it's all taxed as interest income. It just goes in 2 different boxes, one for UK bank interest and one for foreign bank interest, but they're taxed in exactly the same way. If you'd had some tax withheld So if you if the country that the bank account's in pays you interest but deducts a bit of tax before it pays you it, you can ask to deduct that tax from the interest, but that's getting a little bit complicated. But basically, the interest needs to go on your tax return, as wherever it is.
I was also just wondering, because the allowance varies for bank interest and income, so I am not sure where to count it.
Yeah, so because there is a savings allowance, which your foreign bank interest, so any savings income, so any bank interest would use up your savings allowance. As long as it's on your tax return somewhere, really, in a bank interest box, you'll pay the right amount of tax.
Yep. Okay. So is that everyone's questions? Does anyone have any more questions? Right. I think we might all be good. So, right, again, thank you, Stefanie, for your time.
No
And as
problem.
I said
Pleasure.
before, if anyone has any questions they think of afterwards, just email me or message me through Discord and I'll pass them on. So thank you very much, Stefanie. Really appreciate that you've talked us through this, that you've talked us through tax, even the tax return form, because I know a lot of people on social media said the form was a bit scaring them the most. So
Yeah,
thank
it
you very
is.
much.
Yeah, yeah.
So yeah, thank you everyone for also attending, and yeah, thank you.
Okay, my pleasure. Thanks, Ella. Thanks, everybody. Bye bye.
Bye.